Assalamu alaikum. Students, today we will discuss actually page number 31. This is topic of the recording process. In this recording process of your Principles of Accounting ACC230, we will study what an account is and how it helps in the recording process, define debits and credit rules in the recording business transactions, identify the basic steps in the recording process, and explain about the journal and about the ledger and how posting is done and how does it help in the recording process, and after that preparing the trial balance and explain its purpose. So as you see the diagram here, the recording process, okay, the recording process does have the account and steps in the recording process and the trial balance. But before we understand the recording process in the Principles of Accounting, about the accounts, the rules of the debit and credit and journal, ledger, posting, charts of accounts and the trial balance, let me quickly revise what we have studied so far in the last week. We have studied about the accounting equation. What is the accounting equation? We will just quickly take a look. This is known as asset is equal to liabilities plus equity. Okay, for an example, I described you the owners has brought $15,000 to start the business. Okay, then we have to show, or we are supposed to show in the expanded accounting equation. So the expanded accounting equation will be written as follows: asset equal to liabilities plus equity. This is a primary form. Okay, this is what, this is a standard form. Okay, this is a standard form. If I write the expanded form, so it will be written like this. Okay, this will be written like, this is a expanded form of accounting equation. Okay, this we have studied number of times. So the asset will be written like this: asset is equal to liabilities plus owners capital minus owners drawing plus revenues minus expenses. Okay, for an example, I have written here owner brings $15,000. Okay, how much brings does he? He brings $15,000 in the business. So what will be the effect? Now see the effect of bringing $15,000 in the form of cash it is bringing. Okay, so you can write here. Okay, so on the asset side it is $15,000 is equal to liabilities, no effect, so you can write like this, or put a space. Owner's capital, okay, it is $15,000 now. Okay, minus owner's drawing, there is no revenue, no expenses, no. So overall effect will be equalized. The 15,000 cash will increase. Okay, and 15,000 obviously the owner's capital has been brought in the business. Number two equation is company buys or purchased machine $7,000 on credit, not on cash. Okay, it is purchased on the credit. So what will happen here on the number 2 asset? Obviously the fixed assets will get increased by $7,000. Okay, fixed assets will get increased by $7,000 is equal to, since the company has bought on credit, so on the liability side, it will come the $7,000. Okay, and again owner's capital, no effect, owner's drawing, no effect, same way on the revenue and expenses, there will be no effect on the equation. Okay, so overall we will take a look what exactly happens on the left side and what exactly happens on the right side, whether they are equal or not. So you will see here the assets, firstly it was cash and then in the form of the machine. So 15,000 and plus 7,000. Okay, that 15,000 and then it is 7,000. Okay, and equal to, and again they will just take a look 15,000. Okay, here take us liability. First it is written liability, so you just write liability and then 15,000. So that gives you $22,000. Okay, so the equalize. So that standard equation is equalize. We also discuss about one of the equations which I am going to share with you, this figure. Here we just simply take a look about this accounting equation. Okay, so what was the question? That there was a company, Virmari and Company, a public accounting firm. Okay, so we are not supposed to waste our time or invest our time to go through this problem statement. We will just take a look how many transactions are there. 1, 2, 3, 4 and 5. Okay, the owner has invested how much? $25,000 cash in the business. So we will just quickly take a look how will it fit in that tabular analysis of the expanded accounting equation. So the primary equation was asset is equal to liabilities plus owner's equity. On the asset side, if we expand it, okay, so we will try to expand it and we write on the asset side cash plus equipment. Cash is a current asset, equipment is a fixed asset, is equal to accounts payable on the liability side, because these are the liabilities, iltazumat, masuliyat. Okay, students, then plus owner's equity will be divided into 4 parts. The 4 parts, what are those 4 parts? The owner capital minus owner's drawing, rasumat, because these are the drawings written in the form of negative, because from the business owner has withdrawn some money for the personal use, and plus revenues minus expenses. So the first transaction was that $25,000 he has brought in the business. Okay, so the cash will increase. Okay, and on the right side, definitely your owner's capital will get also increased. So 25,000 here, 25,000 here. Your first transaction is now here complete. Okay, second transaction was, what was the second transaction? We will go the second question or the second transaction. Company purchased $7,000 office equipment on credit. What does it mean? Because the company has not bought the office equipment, that is a fixed asset, usul tabita, but they have bought it on the credit. Okay, not cash, right? So how will be the transaction be written? We will go on number 2. Cash, no. Okay, equipment is coming in the business. How much dollar? $7,000. Okay, left side is complete. Go to the right side. Accounts payable, because this 7,000 he has not paid, that is why it is considered as the liability. Okay, so it will be considered as the liability. And now the all other terminologies or transactions would remain same because of no effect, right? We will just quickly take a look what is number 3. The company received 8,000 cash in an exchange for services performed. Okay, company received 8,000 cash and against the services performed. So 8 in number 3, what happens? 8,000. What is happening here? This $8,000 is coming in the business. Okay, and other items unaffected, and owner's capital no effect, drawing no, but revenue is getting increased. Okay, see here the part of the revenue. Revenue is what? Revenue iradat. Okay, these are getting increased in the business, and there is no effect on the expense. No effect here, no effect, no effect, no effect, and here also the no effect. Okay, we will just quickly take a look what exactly is our fourth transaction. Fourth transaction is the company paid $850 for this month's rent as a ijar. Okay, company had paid cash, obviously cash, because if it has retained the rent, so they would have mentioned. So they have not mentioned anything. That means they have paid rent cash $850. Okay. So we will just quickly take a look what exactly is the third transaction. Cash, sorry, this, yeah, fourth transaction. 850 rent they have paid, so it is not coming in the business, it is going from the business. That is why we have written minus. Okay. And also since it is an expense, okay, masrufat, okay, since it is an expense, so that is why I have written in as negative minus 850, right? Expense, see here, minus, so that is why we have written this minus. Okay. We will just quickly take a look what exactly our last transaction. The owner withdrew 1000 cash for personal use. So we will see here, since personal use, the business owner has taken how much? $1000. So it will reduce the cash. If it is increasing the cash, so we will mention plus. It is reducing the cash, that is why we have written here this minus. Okay, minus $1000. Okay. So we will just see here what is the effect on the right side, on the liability and the owner's equity side. Owner's drawing, come to the owner's drawing, and how much getting decreased. Okay, now guess $1000. So we have put here $1000. Overall we will just quickly take a look. We will solve from 1 to 5, and 25,000 plus 8,000, how much? 33,000. 33,000 minus 1,000, 32,000. 32,000 minus 850, coming here 31,150. Okay. On the fixed asset, this giving you the 7,000 straight away. Overall we sum up and find $32,150. Same way, 7,000 we will put straight away. Owner's capital, no effect, 25,000. Drawing, minus 1,000. Okay, so we will write minus 1,000. 8,000 will be written here, 850 will be written here, and we will solve from this point to this point and find the calculation, that is $38,150. Okay, so that is the end of the problem. I hope that you have understood this question properly. Okay students, so after the normal accounting equation and the expanded accounting equation, at page number 31 of your textbook we will study about our recording process. Okay, so we will quickly take a look what exactly we will study here. Recording process यानी सज्जल मामलात माली है. Okay, so how will we record in the transactions? So we have the journal, okay, the ledger, the posting, recording process illustrated, and trial balance, and after that we prepare also the income statement, which is a profit and loss account, and in the last we will study about the balance sheet, which is known as Kashf Mizan al-Umumiyya in Arabic. Okay, so we will just see here what is all about the recording process. In the recording process we need to understand what exactly our debit and credit account. Okay, on the left side we write the debit account, and on the right side we write the credit account. Debit account is mentioned here if something is written like debit. So for an example, just see here, this is a I write here for example debit. So what is debit? Debit yani madeen. Okay, in Arabic it is called as madeen, and in the short form it is called as DR. Okay, we will just see here what exactly it is called DR. Okay, and in the bracket close, debit account. And also on the right side we write the credit account. Okay, the credit account. Credit account is written as CR, C and R. Okay, So the debit account and the credit account. So there are the rules. Okay, this also it is written left or debit side, right side you write credit side, dr. Okay, see here dr, here cr. Okay, this is one of the basic form of an account, and sometimes we refer it as to a T account. Okay, because it a resemblance of a T. How we make the T? We make the T like this. Okay, on the left side, what we write? We write all the debit transactions, Madin, Kullu Mamlat, Madin, and on the right side we mention all the credit account. Okay, so what is exactly the debit and credit, and what are the rules? Okay, that depends upon what kind of the account we have. So we will just mention it quickly. Okay, so I always say that do not depend upon the book. Everything will be taught, everything will be delivered from the book which you have. But now switch over to the page number 35, Hamsatalati. Okay, and we will quickly take a look what exactly is the debit and what exactly of the credit. We have this basic accounting equation: asset is equal to liabilities plus owner's equity, and this is the expanded form: asset is equal to liabilities plus owner's capital minus drawing plus revenue minus expense. Okay, and I have also given you the concept about the asset, the cash and the fixed assets, and the liability side, the account payable. Okay, if you do not write, that doesn't make any difference. We will see what exactly the debit and credit effects on the asset sides: liability, owner's capital, drawing, revenue, and the expense. If assets are increased, so always debit. Okay, if assets are decreased, write on the credit side. Okay, if you see any transaction which increases your asset, either the fixed asset or the current assets, if they are increasing in the business, so you will write on the debit side. If they are decreasing, you will write on the credit side. On the liability side, if they are getting decreased, so you will debit. If they are getting increased, so you will credit. Okay, owner's capital, debit, decreased. Okay, and the credit side, if the capital is getting increased. Same way on the owner's drawing, debit, credit, plus, minus. Okay, drawing, the owner withdraws from the business and keeps on withdrawing from the business, so you will mention on the debit side. If they are getting decreased, so on the credit side. Revenues, if they are getting increase in the business, you will mention on the debit side, otherwise credit side. Same way expenses, if they are getting increased in the business, mention on the debit side. If expenses are decreased in the business, you mention on the credit side. But don't worry at all, I will give you some very easy narration how to what to mention on the debit side and what to mention on the credit side once we will study about the journal and the ledger. Okay, but the only thing you need to understand here, asset. Okay, see how many transactions are there where the point asset, debit, asset, and owner's drawing, and also the expenses. Okay, if you take a look, assets are increased, mention on the debit side, getting decreased, mention on the credit side. Okay, same with drawing and same way with expense. Whatever left, it is a reverse of these three transactions: 1, transaction number 2, and transaction number 3. Okay, so I have prepared here one small table, and in the table form you will be able to understand what exactly is the rule. If assets are increased, okay, so just write on the debit side. Okay, on the debit side, dr. Assets are decreased, increase means here plus. Okay, and decrease means minus. Okay, so if the assets are increased, so you can write what are the transactions which are debit: asset and the expenses. Otherwise 1 2 3, okay, if liabilities are increased, credit. Only the asset are increased, right on the debit side, otherwise credit side. Asset and expenses, okay, income, revenue, equity, liabilities, all are increasing, that will be mentioned on the credit side. Okay, so this is the common rule and very very important, taken from the book. You please mug up, you please recite like anything. The first transaction, the second transaction, yani usul wa masrufat. Okay, if their assets and expenses are increased, put it on the debit side first if it is increased, otherwise credit side. Your liabilities, your income and revenues, and your equity or capital, if they are increased, okay, by any amount, so you credit it, okay, right on the credit side. Okay, again, just to revise, we will see what is the overall effect of the debit and credit in the expanded equation of the accounting equation. Is that if assets and expenses, okay, just find out assets and expenses, if they are increasing, right on the debit side, otherwise right on the credit side. And apart from assets and expenses and owner's drawing, liabilities, the owner's capital and revenue, if they are increasing, right on the debit side, you debit it, otherwise credit it. Okay, so this is the transaction. Now we will see what exactly in the recording process, what does actually the accountant do. First of all, they analyze. Okay, what do they do? This way the recording process is considered to record in the form of journal. Okay, in companies initially record transactions in chronological order. What does it mean, the chronological order? Yani batarikh, okay, date wise, day wise and date wise, kul yom, every time there are transactions and they record each transactions, which is known as the book of the original entry, known as journal. The journal shows the debit and credit effects on specific accounts. Okay, so as it mentioned here, the dates, okay, account title means particular, and all the explanation about that. So once we will study it, inshallah, we will also let you know how the financial transactions or accounting transactions are recorded in the business. Okay, so it is related with the journalizing all the entries. It discloses in one place and completes effect of the transaction. It provides a chronological record. Chronological, as I told you, as per the day and the date. Okay, it helps to prevent or locate errors because the debit and credit amounts for each entry can be easily compared. Okay, so we will do it later on. Firstly, we will just quickly take a look what is the format of the journal journal. See the date and the particulars, reference, and the debit and the credit. Okay, so this is the format. We will see how it is created, the format of the journal. This is very very important. Okay, we will just quickly take a look the format of journal. Okay, so as I told you, the date, okay, the date will be mentioned here, and then just give me a second. Okay, so that is a date, and then we have just a second, what happens? Yeah, particulars. Okay, sometimes in the books it is written like ledger folio, sometimes it is like written this reference. Okay, but no need. Okay, it is not required. And on the other side, the DR and the CR. Okay, CR. So don't get confused. Okay, it's very easy. Inshallah, we will study one by one and we will try to understand. So date, particulars, yani tarikh, मामलात, and then we have the reference. Okay, and then we have the debit transaction and the credit transactions. Right, very easy. Okay, we will just make it in such a manner. Otherwise, we could have expanded little far ahead. So you write here that credit, okay, and put it here so that we have the sufficient space. Okay, what is that? DR. DR is what? The debit. Okay, and the CR is what? Credit. And we will get certain the transactions, and on the basis of that we will study about that how the entries will be recorded. This is a format, Rasam Bayan. Okay, date number 1, number 2 particulars yani मामलात, number 3 reference, number 4 मदीन, तारीख मदीन सज्जल और तारीख दाइन सज्जल. Okay, and number 5 is on credit side. Okay, so we stop here. This is the format of the journal. After the journal, what we will study? We study then we will study after a certain period of time that just a second, let me remove it. Okay, so continuously we will study the first thing, studying about what? The journal. Then we will study about the ledger, then we will study the trial balance, and then we will study about the profit and loss account. Profit and loss account means the muhasaba ridwa khasara. Okay, and tasjeel, tasnif, talkhis, and the mizan al-muraja, muhasab ridwa khasara, journal, ledger, trial balance, profit and loss account. Account is also written like this. Okay, in some of the cases you will find this. Okay, A/C, profit and loss account, and in the last step, which is very important, this is the statement that is known as balance sheet, mizan al-muraja, journal, ledger, trial balance, profit and loss account, and the balance sheet. Okay, we will study in the later part, but let me discuss what exactly is the ledger first of all. Okay, so I discussed about the things here. This is the format of the journal: date, particulars, reference, debit, and the credit. Okay, so we stop here, and I hope that you have understood, starting from the basic form of the accounting equation, then the standard form or expanded form of the accounting equation, then rules of the debit and credit, and after that we will study from journal, ledger, trial balance, profit and loss account, and the balance sheet. Okay, so don't worry at all, and regarding the questions, the examinations, everything, and we will discuss before that. Okay, so thank you very much.